silver should be at least 200 anyway. But
No.
when a market, we found that there's many other instances in history, and we showed them in a recent report, lead, price of bread,
Mm-hmm.
copper. Go back to the 1980s when silver again was under 50, and look at what happened in those metals at different times. When they came out of a zone they'd been living in for decades and went up, it was usually in a handful of months they'd triple or quadruple in price.
Mm.
And then they'd level off into a new zone of reality. So what we're arguing right now is we think we're on the cusp of moving into a new zone of reality.
Mm-hmm.
And once you get there, you're not coming back here again.
Mm-hmm.
Okay? And I think a lot will be told in the first half of that move. Like if we get that spread breakout this month, then by the end of this year, if we find that silver December or January next year is trading at 100, then we're only halfway into that move. We might go to 200. I think that we're headed to a new price reality. And I know a lot of people think we're expecting in the next handful of months, let's say well into next quarter, first quarter of next year, that we're going to get an explosion in the metals that will drop jaws in terms of not just gold going up. For instance, gold, had two bull markets the last 50 years. They were both eightfold moves, bear low to bull high, different span of years, but still eightfold move. If we have an eightfold move, we go to $8,000 gold. Why? Because the bear low was 1,050 in 2015. Okay.
Right.
Forget that. That's a norm. Okay. Silver's the one we're watching the most because silver will move with gold. It always does. But to a lesser extent over time, it's underperforming gold. Mm-hmm. There are times when it outperforms, times when it underperforms. Right now, it's dirt cheap relative to gold. And I think it's going to go ballistic in the next 6 months. And there are certain reasons for that. You can look at a price chart of gold and silver, and they're going up. Okay, well, it's a bull trend. No, that's no revelation, right? Okay, anybody can note that. It's the spread relationship between silver and gold that looks like it's ready to trigger an upwave. And the last time it did this, last two times, was in the final 6 months of the 79 to 80 explosion, where silver went from the teens to $50 in 6 months. Mm-hmm. And in late 2010 to the April 2011 high in silver, where silver doubled in 6 months. This time we expect even more, but it's going to be compressed in a very short time span. Silver, by all kinds of metrics, is vastly underpriced. We know markets make errors, and I think silver has made a huge error. It's still in a 50-year range, only just now moving out of it. That's not true with almost any commodity. Mm-hmm. Not where they were in 1980 or even 2011. So I think silver's going to catch up and it's going to shock people. So people's notions of norms could be sacked.
While gold commands attention, it's silver that arguably offers the most compelling story. Silver traditionally tracks gold's direction, but historically underperforms over the long term. Now the silver to gold spread appears ripe for a breakout. In previous episodes, for example, the 1979-80 surge and again in 2010-11, silver accelerated dramatically, doubling or more in a 6-month span. Today, silver is trading at a relative discount, and signs point to a compressed time frame for its next surge.
Yeah. Well,
so suddenly,
if I'm understanding what you're saying, to you, just looking at past bull markets in gold, we could be looking at $8,000, but that's the norm. And what you're seeing something potentially much bigger than that.
Well,
is that right?
I think this move is going to be different. And one, we're going to seek a new reality price level. In other words, silver, for example, has had a reality for 50 years between basically, $50 highs. Those are extreme. Let's call it 40 to 30 highs, and lows generally 20 or less. But it's been stuck in this sideways range for 5 decades. Mm-hmm. Okay. That's not a reality. Look at a money supply. Okay. Gold at that time has gone up in massive wave layers.
Right.
Eightfold pullback, new reality. Another eightfold move, pullback, new reality. Even the ranges that occurred after those peaks, when you pull back, were staircasing higher over the past 50 years, dramatically. Mm-hmm. Silver hasn't. I think it's going to catch up, and there's technical reasons for that. Uh, and I think there's fundamentals at work here too. And I don't want to get too much into that, but we have a debt crisis now like we've never had. It's not a mortgage crisis with mom and pop jeopardy of their home, like in 2007 to 9. This is a government debt crisis.
Mm-hmm.
And there's no easy way out of it. And like Jamie Dimon says, this game playing every decade or so, trying to solve it with this little patch up or that little, it never works.
Mm-hmm.
Ultimately, you face a crisis type situation. And I think could very well be approaching that. So watch the T-bonds. Right now, they're trying to rally. This is their third rally effort in T-bonds over the last 3 years since they collapsed in 2020 to 2022.
Mm-hmm.
If this rally doesn't take hold, particularly if the rally doesn't take hold, if the stock market starts to sag as well and bonds don't go up.
What's key now isn't simply that both metals are in bull trends, it is the spread relationship between silver and gold. The ratio has begun to shift, momentum is building. The idea, when silver catches up, it may do so rapidly. At the same time, we observe broader systemic pressures, global debt levels, inflationary dynamics, and central bank finances that bear little resemblance to the pre-2008 era. In short, we may be entering uncharted territory, not just another cyclical rally, but a structural reset.
Then that shows how anemic that bond market is, how high the yields are, and how low the price. It can't get off the floor, which says it's sick. Because frankly, when you look at the price chart of T-bonds, and this is a major issue because it's bigger than the stock market.
Oh, yeah.
It collapsed. Okay, we call that collapse in 2020. And then since late 22 and 2023, you could draw a line sideways. Multiple efforts to base and come out of the base. They all fail. Why can't it come out of its base? Why? Because maybe the fundamentals are so bad, it can't do what most markets might be able to do. And if this current rally rolls over much in T-bonds, right now they're 118 plus, you get back under 116, put your helmet on.
Yeah.
Because you may have a T-bond situation that you weren't expecting. That will panic the stock market.
It will also panic the Fed, I would guess, and start to print.
Absolutely.
I mean, it's just, don't you think that the gold and silver markets are snuffing that out? They're sniffing that out right now, aren't they, Michael?
Well, what does gold gain on? It's not because of wars. Never is because of wars, by the way. Wars are often negative trading situations for gold. Go back to 2025, I mean to 2020, go back 25 years to the month of October, exactly 25 years ago. Circle where the S&P was and circle where gold was. Look at a money supply chart, which has gone up like 4.5 fold since then. And look at an S&P chart from that price level it was then to now. It's matched the decay in the money unit.
Another layer to this story is the broader financial market backdrop. The bond market, particularly U.S. Treasury bonds, offers a worrisome signal. Yields are elevated, prices weak, rally attempts faltering. If bonds cannot rebound and equities begin to sag, the spillover effects into precious metals could be substantial. Meanwhile, as fiat currencies like the U.S. dollar remain under pressure from massive supply expansion, hard assets are being reevaluated, not as niche plays, but as core stores of value.
The original thought of Bitcoin was, it's an alternative currency. It's not controlled by government. They can't just print it, et cetera, et cetera.
Right.
It's sort of sort of like a gold competitor. Okay. You go back and take a monthly price chart of Bitcoin futures. Go back to 2021. Okay. And get a monthly chart of NASDAQ 100 and put them on the screen in front of you. Line them up. They're overlays of each other. Almost month by month, certainly pivotal high to pivotal low, including the April sell-off this year. Bitcoin sold off from January to April. The stock market did. It bottomed the same week as the stock market is to a new high, marginal new high, just like NASDAQ made marginal new highs. The problem with Bitcoin is that one, everybody's looking at other cryptos like Ethereum, but Ethereum's like, I think, 13% of the crypto market. Bitcoin's 57%. Okay, so you got to watch Bitcoin. It has a momentum trend structure developed below it. You do not see it on the price chart, only on our momentum charts. That is an overlay of the 1987 S&P chart prior to the crash. So I could take the two charts and lay them on top of each other.
Hmm.
So the momentum structural behavior of what Bitcoin's been doing since
Yes.
2023
Yes.
is build a floor on momentum. Now, price is making higher lows.
Mm-hmm.
Momentum's built a floor that any idiot could see.
Mm-hmm.
You don't want to go back to that floor again.
Hmm.
And there's a couple long-term metrics we use to measure this, and they're different price levels. One of them is around 109. We're
Uh-huh.
trading down to 111 today. Okay, Bitcoin. You
Mm-hmm.
don't want to go to 109, and you definitely never want to see 101 again during the latter part of this year, because you could have an ambush event in the crypto market.
Wow.
And that will impact the stock market, not just because it's correlated price wise over the last several years, but
Mm-hmm.
because we know many companies that aren't even involved in crypto are now suddenly involved in crypto up to
Yeah.
their hips.
Yeah.
And therefore, they can't afford to get gut kicked by an ambush in the crypto market.
My goodness.
Their controllers would get fired. Okay. So it's a situation to watch because if it happens, it's not going to be isolated to Bitcoin.
What gives silver a unique edge is its hybrid role, part monetary metal, part industrial commodity. On the industrial side, demand tied to electronics, photovoltaics, and electric vehicles is climbing. Recent reports show silver entering its fifth consecutive year of structural supply deficit. On the monetary side, the gold-silver ratio is historically wide, implying silver might be undervalued versus its peer. Nevertheless, silver lacks the central bank reserve status of gold, making it more exposed to risk and volatility.
It's got its own, I don't think the Bitcoin has to wait on further dollar drop. We talk about the dollar. There's one, the real value of the money unit just in and of itself. But the
Yes.
other one is the dollar index, which people like to look at like, oh, the
Yeah.
dollar's strong or weak. The
Yeah.
dollar's weak all the time. It's always losing value because they
Right.
increase supply 90% every quarter, every 10 years. Uh, the dollar is index, which is primarily the euro and the yen, by the way,
Mm-hmm. Mm-hmm. Yes.
70% of the dollar. So that's what you're talking about. You're talking the upside down version of the euro and the yen, which are also pieces of crappy paper backed by
Yeah.
nothing.
Mm-hmm.
So who cares what the value of one piece of paper is versus another, when they're all effectively not backed by anything but government printing, okay?
Mm-hmm.
It's a competition.
Yeah.
And they change, and right now, technically, the dollar index is in a very weak trend position. It looks like I wouldn't be shocked we see the dollar index down to 70 or something in the next year or
Wow.
two,
Wow.
which for it is a major collapse.
So.
Uh, but it's the real dollar value of the money units, fiat, euro, yen. I mean, the euro, yen, and the dollar that finally might get recognized as being a game we shouldn't have been playing.
Mm-hmm.
Maybe we should have had unbacked fiats.
Mm-hmm.
Maybe that didn't work out.
Yeah.
Maybe it just created boom bust cycles.
Right.
Maybe the Chinese are right. Gold is the way to
Mm-hmm.
go. It's real. You can't manipulate it. And I think once you get into a crisis situation, especially if it affects the stock market, which means emotion, family's well-being, it's the only thing people have to smile about right now is their retirement account. Take that
Mm-hmm.
away from them, and
Yeah.
it's a dark city.
Yeah.
The data points go south in a big way then, and the central bank does what? Goes ballistic on their monetary excess.
Mm-hmm.
Any tool they can figure out,
Mm-hmm.
QEs or printing money, you name it. And now the Japanese, it's very interesting, and this is politically interesting about the instability that's occurring. Here in the US, we have a guy who ran for president who is supposedly on the free market end of the spectrum. And yet, when it comes to money, he thinks the government should monopoly control it, just like socialist corn crop.
Mm-hmm.
Let's say the government control the production of corn and the pricing of corn.
Mm-hmm.
We call that socialism.
Right.
Well, for 100 years, we've had, the US government controls this fiat unit, prints it. It's no longer backed since Roosevelt and Nixon, and does what they want with it. So it's government control from above. And now we have a president who wants to artificially take the rates back down to 0 or 1
Mm-hmm.
and print money if we need to. And they have a woman just got elected prime minister in Japan who is in effect a Trump type person. In fact, she's endorsed Trump and embraced him and so forth.
Yeah.
And they have a debt crisis there, as we know that the young population in Japan doesn't outpace the population of the older people, and therefore there's a crisis in funding all the
Sure.
obligations and so forth. And so she said, well, we're going to print. Okay, no, therefore, where on the political spectrum in Japan or even in the US do we actually have a solid defense of solid money?
Mm-mm. Nowhere.
Okay, so
I
no
mean,
wonder gold
Judy
is
Shelton,
rampaging. Yeah, it's
Judy,
not.
yeah.
Yeah, it's not like we're going to elect somebody who's going to finally do that. No, we've given up on it.
So, what might the next move look like? Current forecasts suggest silver could test the 40-50 per ounce range in 2025, perhaps more if the spread breaks and the broader macro environment becomes crisis-driven. Key watch points include the gold-silver ratio, industrial demand trends, notably in green technology, real yields and bond market health, and the value of fiat currencies. If silver breaks its long sideways range, we may be entering a new price reality, one where norms get overturned and historic ranges become relics.
Silver should be at least 200 anyway.
No.
But when a market, we found that there's many other instances in history, and we showed them in a recent report, lead, price of bread,
Mm-hmm.
copper. Go back to the 1980s when silver again was under 50, and look at what happened in those metals at different times. When they came out of a zone they'd been living in for decades and went up, it was usually in a handful of months they'd triple or quadruple in price.
Mm.
And then they'd level off into a new zone of reality. So what we're arguing right now is we think we're on the cusp of moving into a new zone of reality.
Mm-hmm.
And once you get there, you're not coming back here again.
Mm-hmm.
Okay? You know, and I think a lot will be told in the first half of that move. Like if we get that spread breakout this month, then by the end of this year, if we find that silver December or January next year is trading at 100, then we're only halfway into that move. We might go to 200. I'm looking for something meteoric, literally a quantum leap in silver, not a normal type of thing. And it certainly don't reference RSI.
Yeah.
It's going to be overdone RSI the whole way up. Okay. Anyway, that's the reality I think we're facing. And I think the key ingredient is not that they're in bull trends, it's that spread relationship.
What is the spread now, Michael, more or less?
That's like 1.24 area.
Okay.
But it's
So
been
we're
moving up sharply for the last 5 months.
uh-huh.
Silver's been gaining rapidly versus, in fact, net on the year, silver's up more than gold. But the
Well,
spread's been gaining, and we also run momentum of that spread.
mm-hmm.
Spread chart's a price chart, price versus price. Okay, we run momentum of that, and it's at breakout levels already,
Mm-hmm.
well before getting to that 1.31. So we're pretty confident that one, the spread's going to break out because momentum of the spread is already at breakout levels. And then once we do, that's when the tonal change occurs. The game changes.